Welcome back. If you're trying to find professionals out there, trying to figure out who to start these relationships with, and just that engagement, that accessibility, the ability to find them when you need to find them, ask the questions you need to be asked is so key. And, we've talked about all these ways I mentioned earlier, whether it's, whether it's dinners or birthday cards, meetings, whether they're quarterly or annual, just keeping up with you on the phone or educating you is such a key factor. And thanks to all of our guests who are in studio today, because this is really a group that is here to give back. I mean, they're really here to give people the information and education they need. Ryan Leopold is back today, and welcome back, Ryan.
Great. Thanks for having me, Ben.
Yep. So let's just hit on, I think that Jim had just some interesting thoughts on investment properties and buying them. From the real estate side, oftentimes it's what property is the best, but from the finance side, there's a big difference between the way that maybe some lenders go about, here's what you can do as far as financing, versus really helping them, educating them on finding the numbers to get the right deal.
Yeah, I think it's a little bit of both. I think it's one, if an investor is coming into the market, they already seem to be pretty well versed, and they have a why of why they're, they either have experience working with investment properties in the past, or they're new and they're already kind of educated. I mean, we sit down and have a full consultation with them, but it seems like they know why they're coming in the market. What's interesting is the people who are thinking about investing but are just kind of starting the process is understanding kind of the why, and is it a good time to do it, and are they the right person to start the process? It's an interesting topic to discuss these days, because I think it's a different market today.
Well, in a few minutes, I want to hit on what Warren Buffett said, because I think that's key. But talk a little bit about why why you are seeing people come in potentially with investment properties, and some of the reasons that you're seeing it as a good idea.
Yeah, so it's been the last couple of years. We've seen foreclosures. We've seen people buy investment properties via short sales, bank-owned properties. Some unique financing programs have come about over the last couple of years that I think is opening the door for more people. But I just took some time over the last couple of weeks and just looked at the numbers and looked at kind of the psychology, what's happening in the market right now, to say, hey, for the right person, it could be a really good time to be an investor. I really try to take the approach of saying it's not my job to tell people they should or shouldn't be investing. It's to educate them on the options and what's going on in the market. But you take a look at the logic of what's happening out there, it seems to be if someone has a temperament to be an investor, that's a really good time, because of some of the circumstances that are taking place out there.
And so what are some of those numbers you're showing people? I mean, with rates being low, you talked a little bit about, the rate of return people can see.
Yeah, so a couple of weeks ago, we talked about buyers trying to come back into the market after they went through foreclosure, short sale, bankruptcy, some kind of distress, okay? So a lot of families are out there who lost their home for various different reasons, and they need to rent. Okay, so you're seeing the vacancy rates really coming down over the last couple of years quite a bit, from like 6 to 7% down to 4 to 5% in different markets. So it's really the demand for good properties is out there. So a family isn't really going in or wanting to rent an apartment. So families need to rent a home because they have 2 or 3 kids and they want to stay in a certain school district. So the supply versus the demand for good single-family homes is pretty high. I mean, people want these properties, but there's not very many out there, especially to accommodate what a lot of these people need, which is longer-term leases. And I think people are willing to pay more for a longer-term lease if they know they can be in a home until they can qualify to buy again. So I just think that's an unbelievable opportunity.
And so when you start looking at that, I mean, these are big numbers. I mean, you can put your 20 or 30% down, which with today's interest or today's prices can be not as much as people think. And then you really have the ability to cash flow this. I mean, you buy at the bottom with it low interest rates, and it shows an investment. I mean, we talked a little bit about before, just, all of a sudden stock market's way up. Well, you're supposed to buy low and sell high, and I don't do investment advice, but in my, 35,000 foot view, it's like, oh, guess what? Stock market's up and real estate's down. Why don't you convert over to the to the one that's down and ride it back up?
Yeah, well, I think what's interesting is a lot of people follow the masses when it comes to any kind of investing, and especially in real estate. I mean, I was a victim of it as well. I bought a lot of real estate in 2004 through 2007, and that's kind of the height when everybody else was buying as well. So you're kind of in this market now where there's not a lot of investors out there, but I think the smart ones are getting into the market, and that's going to play into Warren Buffett's kind of comments he made the other day on CNBC as well. But let's just look at the numbers from a stock market versus real estate standpoint over time. So let's just say you have $100,000 to work with, and you want to put 25% down on an investment property, so you can buy something for $400,000. Okay, you can buy a nice house for $400,000. That same house that you're buying for $400,000, somebody else bought in 2001 for $400,000 in Bellevue.
And in 2007, they bought it for $700,000.
Exactly. So it's interesting. You're getting $2,000 to $2,300 a month in rent, give or take, and you can probably get a little bit more if you're giving a longer-term lease for somebody who has a family who wants to stay in that home. You're probably going to cash flow $200 to $400 a month on that, and you're getting 4% interest rates. So the internal rate of return on that $100,000, if you have, let's say, 3 to 4% appreciation and 3 to 4% rent increases over the next 10 to 30 years, that's an internal rate of return of 9 to 12%. Over that period of time, and you have that leverage position of buying a $400,000 asset that, quite frankly, could have some equity built in it as well. So if you just look at the numbers, it's intriguing as long as you're diversifying and you know what you're doing and how you're getting into it and you have a plan of attack into it. I just think the numbers are interesting.
Well, they're interesting in the fact that that's without appreciation. And I always remember talking to people, 3-4 years ago, and it was speculative buying. I guess looking back. It was speculation, not investment. People bought it thinking, well, it's going to go up, right? Versus making sound financial decisions for month 1 and month 2.
And that's why I look at it today is let's look at it from the logic of the standpoint. There's a pent-up demand for a product, okay? There's technically not really a lot of supply out there or a demand for people actually buying that supply for these reasons. And you're providing a very valuable service to families who need homes, who want to stay in those homes 2 to 4 years to have stability. And now you have the stock market that's done pretty well over the last, 8 to 12 months. You have some money built up. You can now diversify that a little bit and actually get out there and take advantage of the market. And, facts. People need these properties. Interest rates are at 4%. Rental rates are going up, and it's different.
Well, the other key point, especially from the mortgage and finance side, is you're actually cash flow. You're making money on a monthly basis. Mm-hmm. And 4 years ago, people were just buying them, and you didn't have to make any money on a monthly basis because the properties were going to go up 10% a year. This is much more sound, and this is much, much more conservative investing than it was 4 or 5 years ago. Mm-hmm. I think it's the way people invest. I mean, it is the way people invest in real estate 20 years ago and 30 years ago in a way that made sense on a monthly basis, not with this speculative buying of it's going to go up forever and ever. Mm-hmm. So certainly there's a big transition there. Ryan, you brought up this Warren Buffett comment that he said. He wants to buy some houses, maybe?
Warren Buffett finally came out and made some comments about the housing market. He said, look, if you buy real estate today under the right terms and conditions, he believes it's going to outperform stocks over the next 20 to 30 years if it's done under the right terms and conditions. And he said if it was practical to do so, he would buy hundreds of thousands of properties based on that same equation we just said, is there's a huge demand for these properties, limited supply of investors actually going and buying them. And, it's just a unique time. There's not a lot of people out there doing it, which is different than 3, 4, 5 years ago where it was all speculative, that everybody was out there buying. And, now is the time when you buy stuff like this, not when everybody else is doing it.
It kind of goes back to, hey, this is more of the get-rich-slow technique versus everybody wanted the get-rich-quick technique of, 3 or 4 years past. So, there, as you said, it's a 20 or 30-year maybe plan, not buy it, flip it, move to Lake Washington anymore. Mm-hmm. Although that was a great plan. Thanks, Ryan, for joining us again. That's Ryan Leopold with Cobalt Mortgage and senior mortgage planner over there. When we come back, a lot of people have thought about buying investment properties. Sometimes you got to fix them up, though. Paul Valley is going to join us from Organized Spaces and talk to you a little bit about some of the ways you can make sure you're doing it the right way. My name is Ben Brash, and that was Ryan Leopold. You're listening to Brashonomics.